Welcome to LeonCo, welcome to your weekly financial news. Welcome to LeonCo, welcome to your weekly financial news, and on this week's financial news, we'll be discussing the uprising of the stock market. Yes, if you've noticed, these couple of weeks, the stock market has been going back to what seemed to be the normality, or going back to its normal state regarding we are not back in the Dow in the 30s, but we're getting to the 27s and the 28, which is pretty high for the situation that we're facing. Even though the federal government has not decided on bringing another stimulus, the President of the United States have signed an executive order. The Democrats are not going to put that in hold or are going to go against it. They're actually favoring of the executive order, but there has not been another stimulus. We're still waiting for another stimulus. This is our third week, heading into our fourth week of waiting to see if there's going to be another stimulus and into direct or specific areas. But in the stock market has been rallying up. Companies have been doing very good, especially tech companies have been the key components in this rally in the stock market. But even though they have been the key components in their stock market rally, they are doing this strategy. They are stock splitting. Yes, there are several tech companies that are going to go in the stock split route. One of them is Tesla. Tesla, by the end of August, is going to do a 5-to-1 stock split. Yes, this means they are going to divide its stock into 5 pieces. And if you own 1 stock, then you own 5. If you own 1,000, you own 5,000. And why is this? Well, there's not really a specific answer to why are they doing this, but there are lots of speculations. That could be that they want to, Elon has been talking about how his stock has been overvalued throughout all of this process, and this could be one of those situations in which they want to attract more investors. Having the stock being split from his 1,500 to 1,700 sort of price range up to down to $200, maybe $300 attracts more investors in the company. So this is one great strategy for them to raise capital without necessarily having to go onto debt. There are other reasons that they could be done, but this is just one example of how companies, specifically in the tech sector, that are using these methods to try and raise more capital and to try and attract more investors to give their company more liquidity and more solvency when it comes to this situation that we're facing. Regarding on how is the economy standing, well, the reality is that since we have not received stimulus, this month of August is going to be one that is very challenging. There has not been another bill. The CARES Act has gone from effectiveness, and people are starting to struggle with this. The law for eviction has been withdrawn, so people can start getting evicted now again from their homes. People need to get or find ways to start paying their bills and start paying their monthly due diligence. Even though President of the United States has signed an executive order, we're still waiting to see how is everything going to start back again. Even though there is a lot of hopes that the stock market and the economy will flourish, the reality is that in the next couple of weeks, we are going to see if the effect of the federal government of not passing a stimulus and just sitting in their chairs and waiting to see what happens is a good thing, or is it going to be something that affects drastically the economy? So this has been your weekly financial news. I hope you guys stay safe, stay healthy, but always remember to have that king mentality.